Okay. Good morning, everyone. Thank you for joining us. I hope everyone had a wonderful Thanksgiving break and is coming back refreshed and ready to learn. So today is the third webinar from our fiscal training webinar series, and we will be discussing the contract and payment process today. This webinar is being presented by the California Department of Education, Early Education and Nutrition Fiscal Services Unit of the Fiscal and Administrative Services Division. So we call ourselves EENFS for short. For those that do not know me, my name is Corey Kahn, and I'm the manager over the EENFS unit. I'm joined today by all of the EENFS fiscal analysts and managers who have continuously been working on these presentations. As we have said in the past, we have disabled the chat box for participants, although EENFS staff may use this feature to share links with you throughout the presentation. So our team is committed to being as responsive as possible, but will most likely not get to answer every question. So please utilize the Q&A feature to ask us questions and give us as much detail as possible before clicking that submit button. At the end of the presentation, Alan Lynch will be facilitating a live Q&A session where he will go over some frequently asked questions that have come through during the webinar, or call on participants that have raised their hand. If we are unable to get through all the questions, we'll take them back and try to reach out to you later, or we may use them for developing answers to an FAQ on our website. So when you do submit your question through the Q&A, please include identifying information such as your vendor number or agency name. This will allow us to track questions that have come in and follow up with you in case your question was not answered during the webinar. So before we get started this morning, I wanted to take a moment to address one of our commonly asked questions we receive in these webinars, and that is, will this webinar be posted? So our office has been recording these webinars, and we're doing so today in hopes of posting them to our webpage. And one of our team members, Jenny Tran, has been diligently working on transcribing past webinars and has posted the first webinar we had conducted from this training series to our webpage. In doing so, we have created a webpage dedicated to webinars and trainings and can be found at https://www.cde.ca.gov/FG/AA/webinars-and-trainings.asp. And Jenny will post the link in the chat for you all to grab. So navigating to this page, and we've put a screenshot on the PowerPoint right now, you'll find a table with 3 columns that identifies the date in which the webinar took place. There's a column that has the link to the specific recording, and then the far right column provides a summary of the training topics that were covered in that webinar. So for example, the first webinar of this training series was conducted on November 13th, 2024. It was entitled Enrollment, Attendance, and Fiscal Reporting Requirements, and that is the title as a link, a hyperlink. And then we went over in that webinar reporting requirements, enrollment and attendance source documentation, and revenue and expense source documents. So webinars will continue to be recorded, and we'll post them to this table on this webpage as they become available. So we will be sending a listserv out just announcing this webpage. We don't suspect that as we post more and more webinars, we're not going to send a listserv every time they're posted, but just bookmark this page and then continuously go back to it. Now I'm going to turn it over to the presenters for this morning. So it's Alyssa Rodriguez and Samira Wiggins.
Thank you, Corey. My name is Alyssa Rodriguez, and I am a fiscal analyst within EE&FS. I am joined by my colleague, Samira Wiggins, and during this presentation, we will discuss the contract and payment process. Here are the topics we will be discussing. First, original contracts and contract amendments. We will be going over a contract face sheet and different types of contract changes. Next, contract budgeting. Then, enrollment, attendance, and fiscal report requirements. Also, apportionment payments with a breakdown of the warrant and remittance advice. And lastly, where to find the enrollment, attendance, and fiscal reporting reimbursement procedures known as the Fiscal Handbook. Let's discuss original contract and contract amendments. I will go over the contract face sheet and contract amendments that can be initiated by the CDE or by the contractor. This is a sample contract face sheet. First is the contract number in the upper right-hand corner. CSPP 4. The 4 indicates that this is a contract from fiscal year 24-25, and last 3 digits represent the state preschool contract issued. If the contract is on conditional or provisional status, that will be displayed just above the contract number. Underneath is the program type, which in this example is the California State Preschool Program. Next, we have the project number. First 2 numbers represent the county number, next 4-digit vendor number, followed by 00, and last number represents the fiscal year. In this example, 30 represents Orange County, vendor number X431, followed by the standard 00 and then 4, which represents the fiscal year of fiscal year 2024-25. Then legal name, for this example, Oz Childcare. Within the body of the contract face sheet, we then can see the contractor's period of performance of July 1st, 2024 through June 30th, 2025. Next, we have the maximum reimbursable amount, MRA, of $500,000. Then the minimum days of operation, or MDO, of 246. Towards the bottom of the face sheet, there is an encumbrance amount or amount we are setting aside for your agency to fully earn your contract, which in this case is equal to the MRA. You will also notice the important note that indicates signature is not required. Original contracts. As I just pointed out, the bottom of the original contract face sheet had an important note stating that signature was not required. Contractors who submit a timely and acceptable continued funding application last year received their executed contract for fiscal year 2024-25 by June 1st, 2024. For existing contractors, the original contract did not have to be signed and returned and was executed upon delivery of the contract. However, new contractors must sign and return their initial contract. For amendments, not all amendments require a signature and will be issued via allocation letter. Contract amendments initiated by CDE. These are changes that are typically a result of the enacted Budget Act. You may know them as Budget Act amendments. Budget Act amendments are meant to true up contract terms based on changes made in the enacted budget. Budget Act amendments are processed via allocation letter, meaning they do not require a signature to be executed. When the budget is signed, it may include changes such as cost of living adjustment or COLA, growth, reimbursement rate changes, family fee changes, or adjustment factor changes. Here are some contract changes and amendments initiated by the contractor. Changes amended via allocation letter and do not require a signature are intra-agency transfers available to non-LEAs only who hold a general child care contract with the Department of Social Services and a CSPP contract with CDE. Minimum days of operation changes, voluntary temporary transfers, also known as a VTT, contract amendments that require a signature and will need to be returned are any change in the legal address, name, or vendor number of your agency, and we will recommend these should be done by July 1st in order to avoid disruption of your apportionment payments. Program narrative change, expansion funds, startup and contract relinquishment are also require a signature and need to be returned. Shown on the screen here is an example of a contract amendment that will require a signature. In this example, the amount is adding startup into the contract. Just like the original contract face sheet in the upper right-hand corner is the contract number, program type, and project number. On the top left, it states the amendment number. In this example, this is the first amendment and is indicated as Amendment 01 at the top left. A few rows below the amendment number, you will see a reason, and in this example, this amendment is for RFA number 7, specifically for startup. It then goes on to reflect the new MRA from 500,000 to 600,000. On the bottom right is where the contractor signs the amendment, then returns to the contract office. Now that we've discussed the types of contract changes and amendments, let's talk about the executed amendment process for contract amendments that are initiated by the contractor when a signature is required. The contractor would send the request to their EED consultant. Once approved by EED, they will forward that to EENFS. Once we've received the amendment at EENFS, we will review, approve, and forward the request to the contracts office for processing. Once approved by the contracts office, they will email the amendment to the agency. The agency is then required to sign the contract and send back to the contracts office. Once received, the contracts office will sign and send back to the agency. The amendment process is now complete and the amendment is fully executed. Now shown on the screen is an example of an allocation letter. As mentioned before, there are certain contract amendments that do not require a signature from the contractor to be fully executed. For those amendments, contractors are sent a contract allocation letter. In this example, the amendment is increasing the minimum days of operation. Just like the original contract face sheet and the previous contract amendment we went over, the contract number, program type, and project number will always be found on the top right-hand corner of the face sheet. On the top left, it states the amendment number. In this example, it is the first amendment and is indicated as Amendment 01 at the top left. A few rows down is an indicator that this is an allocation letter, followed by a reason. In this example, the amendment is for an MDO increase. The stated change to the MDO is found within the text. In this example, the MDO is increasing from 240 to 246 days. In the bottom left, it states important, signature is not required. Next, we can go over the allocation letter process when no signature is required. The contractor submits a request to EED or EENFS. If submitted to EED first, EED approves, then forwards to EENFS. Once EENFS reviews and approves, we will forward it to the contracts office. Once processed by the contracts office, an allocation letter is emailed to the contractor. Now the amendment is fully executed. Now that we have gone over the contract face sheet, let's discuss how to budget your contract using the information on your contract face sheet. As of January 2022, reimbursement rates are dependent upon the county in which services are provided. Current full day and part day county rates can be found at https://www.cde.ca.gov/fg/aa/cd/documents/CSPP contract rates.xlsx, and that will be dropped into the chat at this time. How many children can I serve with my maximum reimbursable amount, or the MRA? You can determine the amount of children you need to serve to fully earn your MRA by using these calculations. To calculate the number of full-time equivalent, or FTE children, first divide the MRA by the full day rate to determine the CDEs. Then you will divide the CDEs by the MDO to calculate the number of FTE children. You can find the MRA and MDO on your contract face sheet. And that website for the calculator is https://www.cde.ca.gov/fg/aa/cd/, and that web address will now be dropped into the chat as well. So now let's look at some examples. Here is an example if serving in one service county. For this example, first divide the MRA of $250,000 by the full day rate of $61.26 to get the CDEs of 4,081. Then you will take the CDEs of 4,081 and divide by the MDO of 240 to get 17 full-time children. What this means is a contractor needs to serve 17 children to fully earn their contract. Keep in mind that services may change depending on your MDO and category of children you are serving. Now let's look at an example of a contractor that serves in 2 service counties with different full-day rates. For contractors serving in 2 service counties, you will need to utilize the CDE calculator to determine the CDEs for each county. When using the CDE calculator, you will need to input the MRA and percentage of services that you are serving in each county. The calculator can be found on our webpage, and we will provide that web address in the next few slides. For this example, for County 1, take the MRA of 250,000 multiplied by the 60% of services in this county to get 150,000. Then taking the 150,000 and dividing it by the full day rate of $61.26 to get the CDEs of 2,449 for this county. Then doing the same for the second county, the MRA of 100,000 multiplied by, the MRA of 250,000 multiplied by 40% to get the 100,000. Then taking the 100,000 and dividing by the full day rate of $62.66 to get the CDEs of 1,596 for the second county. To find the FTE children, we will take the total CDEs for both counties of 4,045 and divide by the MDO of 240 to get the 16.85 FTE children. You will need to serve 16 to 17 children to fully earn the contract in this scenario. Now we have an example of a part-day, part-year program. For this example, divide the MRA of 250,000 by the part-day rate of $40.07 to get the CDEs of 6,239. Then take the CDEs of 6,239 and divide by the MDO of 180 to get the full-time equivalent children of 34.66. This contractor will need to serve 34 to 35 children to fully earn their contract. Note how many more children it will take to fill your program if only serving part day, part year. The link for part day rates was provided in the chat on a previous slide. Beyond these 3 scenarios, there are instances where programs serve in multiple service counties and use multiple adjustment factors. EENFS developed a funded enrollment calculator, which provides CSPP contractors with a tool to assist in determining the number of children funded to be served by service county, as well as number of children required to meet the set aside to serve children with exceptional needs and children with severe disabilities. The funding enrollment calculator and video tutorial can be found on our webpage at https://www.cde.ca.gov/fg/aa/cd/. And again, that web address will now be dropped into the chat. I will now hand it over to my colleague, Samira, who will take over. Thank you, everyone.
Good morning, everyone. My name is Samira Wiggins, and I am a fiscal analyst with the EENFS department. So let's go ahead and get started. Now that we have talked about contract amendments, let's discuss enrollment attendance and fiscal reporting requirements. All right, so Title V, Section 17821A state that all contractors must certify reports at intervals specified in the annual child development contract. Title V, Section 17821D requires contractors that are on conditional or provisional status to submit reports monthly. All other contractors will certify reports quarterly for the periods ending September 30th, December 31st, March 31st, and June 30th. Reports are due by the 20th of the month following the end of the reporting period. If the 20th falls on a weekend or holiday, reports are due on the next business day. After certifying your reports, on the CPARES website, your fiscal analysts will review and approve them, and the earnings calculation and corresponding letter will be available to view in CPARES. It's really important to certify your reports on time. If a report is delinquent and results in an apportionment being withheld, a withhold letter will be emailed to you. If this will occur if we have attempted to make a payment before your report was accepted. Okay, so now we'll move on to report forms. There are two types of report forms. The first one will be the CSPP Enrollment Attendance and Fiscal Report. Second is the CPKS Support Contract Expense Report. Report forms are located and certified in the California Preschool Accounting Reporting Information System, also known as CPARES, which can be found at https://www.cd.gov/FG/CPARIS/HOMEPAGE period ASP, and that web address will be dropped into the chat. Okay, so here is a list of reporting deadlines for contractors. Contractors on clear status are only required to report quarterly, whereas provisional and conditional contractors must certify reports each month by the 20th. As stated before, if the 20th falls on a weekend or holiday, the report is due on the next state working day. If you notice on the bottom of the slide, for the June deadline, there is an extra report for reserve accounts that is due with the June year-end report. This report is required for contractors that have reserve accounts. Contractors must also provide a general ledger for the reserve account. Reserve accounts will be discussed later in the preschool reserve account training, which takes place on December 18th, 2024. Now let's take a look at situations that affect your apportionment payments. Per Title V, Section 17814, apportionments can be reduced, withheld, or canceled if one or more of the following conditions exist. What has been included on the slide are reasons for withhold. Specifically, apportionments will be withheld if the contractor has not submitted an acceptable audit for any prior year of operation on or before the due date, if the contractor has not submitted the reports required by sections 17821, 17822, 17823, 17524, or 17825 of this chapter, if applicable, on or before the due date. And then lastly, on this slide would be if the contractor has accounts payables, which are A, more than 90 days delinquent in the CDE to the CDE, and B, not under appeal as specified in either section 17826 or section 17833 of this chapter. It is really important to submit and certify your reports on time, as any reports not received by the due date will be considered delinquent and the apportionment will be withheld. If your apportionment is being withheld for any reason, as I have stated, you will receive a notification via email. Now that we have discussed reporting deadlines, let's discuss apportionment payments. Now let's discuss how apportionment payments are determined. Each month's normal apportionment is a fixed percentage of the contract's MRA. Apportionments serve as advances. Apportionment amounts may be reduced based on projections, calculations, using data from the most recent enrollment attendance and fiscal report. The initial apportionment represents payments through September. The projected contract earnings combined with the apportionment schedule in the EENFS fiscal handbook to produce a flow of funds throughout the year that corresponds to the amount a contract is expected to earn. So now we'll look at the apportionment schedule. EENFS apportions CSPP contract funds based on the stated apportionment schedule and apportionment percentage. The apportionment percentage is applied to the amount a contract is projected to earn. At the beginning of the fiscal year, EENFS advances 25% of the CSPP contract MRA, which is the sum of percentages for July, August, and September. After the initial apportionment, the next payment will represent payment for October and November. The apportionment schedule for October and November is 16.6%, as this represents the sum of percentages for 2 months. Further advances are based on multiplying the apportionment percentage by the projected contract earnings and taking into account the amount that has been paid thus far, provided that the contractor has timely execution of contracts and amendments and continues to stay in compliance with all contract requirements. Payments can be expected the month prior payments can be expected the month prior the service month. For example, payments for December services would be expected to be received by November. Pre-kindergarten and family literacy support, or CPKS contracts, are advanced 25% of the MRA at the beginning of the fiscal year. Subsequent apportionment payments are based on reported costs identified on certified support contract expense reports submitted in CPARIS. Now let's take a look at the direct deposits. So CDE has an ongoing partnership with the Foundation for California Community Colleges, which is known as Foundation CCC, to provide efficient and streamlined payment solutions to contractors. Foundation CCC transfers funds to the contractor's bank account or sends a paper check per the contractor's preference indicated on the JOT form that was completed by the contractors. Payment information will continue to be viewable in CPARES with this change. Further questions about direct deposits may be answered at the following website: https://www.cde.ca.gov/FG/DIRECT/DEPOSITS.ASP. If at any time you need to make a change to your submission, please email payments@foundationccc.org to request the jot form link to make direct deposit changes. Alrighty, now apportionments will be authorized by EENFS based on the reports you are submitting monthly or quarterly. As soon as we receive an acceptable report, we process it and the report then generates an earning calculation sheet, which will be viewable in CPARES for your agency. EENFS has a set payment schedule, and apportionments will be processed based on this schedule. During this time, your fiscal analyst will authorize a payment, and once your fiscal analyst approves the apportionment, it will be sent to the Foundation CCC to be processed. Once the Foundation CCC processes the payment, they will send the payment to your agency based upon the delivery method you have selected, either paper check or direct deposit. The entire process takes about 3 to 4 weeks once we receive acceptable reports. Now let's briefly look at a sample warrant. First, we will see that the issue date for this sample warrant is the date of July 14th, 2024. To the right of the issue date, we see the warrant number. In this example, the warrant number is 3003862. Under the date and the warrant number, we can see the payment amount. For this sample warrant, the check amount is $250,000. And lastly, the agency name. In this example, the agency is Oz Child Care. Okay, now on this slide is a sample remittance advice that CSPP contractors receive in the mail when they are signed up for a paper warrant. When a contractor is signed up for direct deposit, the person identified as the agency contact will receive an email with the remittance app advice attached. If at any time you need to make a change to your contact person, please email payments@foundationccc.org. First, the agency's name and address can be located on the top left. In this example, the contractor, which is Oz Child Care, the payment date and payment amount on the remittance form will match the date and amount on the warrant. Under Invoice ID, you'll see an alphanumeric number beginning in fiscal year 2024-25. There has been a change in the invoice ID. The invoice ID will now read PR for preschool instead of CD, as previously listed, followed by an 8-digit code which identifies CDE's schedule in which this payment was processed. In this example, the invoice ID is PR 202-40101. This ID is an excellent indicator that this belongs to a CSPP or CPKS contract payment. The next 5 digits represent the agency's vendor number. In some cases, the vendor number may be 5 digits. In some cases, it may be 4 digits. In CPARES, which will display the 4-digit vendor number with an additional digit that can be disregarded. The amount will match The amount paid will match the amount on the warrant. You can use the invoice ID to look up payment information in CPARIS. Your fiscal analyst and their email is listed in case you have any questions, which is another indicator that this payment is from early education. Last, we will be discussing the attendance and fiscal reporting and reimbursement procedures for early education contracts. The EENFS handbook is an aid to explaining attendance and fiscal reporting, reimbursement procedures, the role of the Fiscal and Administrative Services Division, FASD, and its EENFS unit. The EENFS Fiscal Handbook combines information from the contract terms and conditions, which is also known as CT&C, the California Code of Regulations, CCR, Title V, and the California Education Code. The EENFS Fiscal Handbook is updated annually and has been updated for fiscal year 24-25. You can download the newly revised Fiscal Handbook on the California Department of Education's website at https://www.cde.ca.gov/FG/AA/CD/.